How much is your mortgage costing you? If you're buying a new home and getting a mortgage for it, don't you want to know how much it's going to cost you? I'm Kevin Allen with Trinity Mortgages. In this next video, I'm going to walk you through the costs of actually borrowing money. Let's start with the basics. Every month you make a mortgage payment, a portion of that payment goes towards your principal, a portion of that goes towards your interest. What we mean by principal is the pay down on the amount of money you borrowed. And what we mean by interest is simply the amount of interest you are paying as a dollar amount to the lender for the funding that you received to purchase that property. But there are other costs. When you're buying a house and getting a loan, there are other associated fees that come along with that. It's not free. So the lender's gonna send a third-party appraiser to the house to make sure that the house you bought is not overvalued. And of course, this costs money. The mortgage appraisal for your house is gonna cost roughly between $300 and $600. That cost is going to be on you. It can either be rolled into your mortgage or it's something that we can deal with up front. Now, sometimes when we here at Trinity Mortgages get creative, we can actually sometimes get that amount that you paid for that appraisal refunded to you on closing. So another possible cost that you probably may or may not have thought of is mortgage insurance. If you're putting less than 20% down on your house, you're gonna have what's called mortgage insurance. That associated cost is going to be blended into your monthly payment, so it's not a cost that you need to come up with up front or on closing. It gets blended into your mortgage payments. Okay, next up, you're gonna have your lender origination fees. These fees are also something that can be, generally speaking, blended into your monthly payments, whether it's administration fee or anything else like that. But again, this is one of those things that we here at Trinity Mortgages are going to go over and explain. That's why it's important to have somebody with the Home Max Advantage. See, so every lender has different fees. So it's not just the interest rate that you need to look at. It's the fees, the administration costs, that type of thing, whether it's rolled into your payments or whether it's not. Those are the things that are very important to look at.
Hey, it's Nick here with Trinity Mortgages. Now, it is very important you get pre-qualified for a loan before you go out shopping for a house. This allows you to know all of your numbers ahead of time, and getting pre-qualified doesn't cost you anything. As a matter of fact, you're not gonna have any out-of-pocket costs associated with your loan until you find a property to purchase. Now let's get into those costs. Now, there are a few standard costs that you will have to be out of pocket at closing table. Those are things such as land transfer tax, lawyer fees, and title insurance. Now, your land transfer tax, that's the government's way of getting their little bit out of the pie for every time that a house sells. Now, that's gonna vary, and that varies depending what municipality you live in and what price point of property you're buying. Could be anywhere from $500 up to $20,000 or more, and that cost is actually wiped clean. If it's your first property, you get your first one free. Now, you also have your lawyer fees. Those are usually in the $600 to $900 range. That's going to depend on who you're using for a lawyer, and that covers all your closing paperwork that they're doing, all the stuff behind the scenes, coming in, signing things, all that. Then last, you have your title insurance. Title insurance is a great little product. Without it, you'd have to get a full survey done of your entire property, which costs usually $1,500 to $2,000. But for $300 to $400, you can get title insurance, and that just ensures you that if 10 years from now, you find out that your garage is really a little bit on your neighbor's property and he wants you to tear it down, title insurance will cover you for that loss. Now, the final cost isn't an upfront cost, but it's definitely one you're gonna wanna consider, and that's the cost to break your mortgage. Now, the average Canadian gets a 5-year mortgage, but they only stay in it for 2.7 years. Now, that's gonna cost you to break that mortgage early. And that's why it's so important to factor that into everything when you're looking at your numbers, not only the interest rate, but also the cost to break the mortgage. The most important thing about finding financing for your house is strategically choosing the product that is the best for you, and this is a great example of that. I hope this video walked you through the exact cost to be able to get a mortgage, help you better understand where your money's spent. If you have any more questions at all, feel free to reach out to us. We'd be more than happy to put together a closing cost estimate sheet and also provide you with at least 3 options of potential financing for you. You don't make money in real estate when you sell, you make money when you buy. And we want to make sure you're getting the best financing with the best rate and terms to make sure you have the best chance of doing that.
Thanks for watching, and again, we want to make that happen for you.